I think to answer your question in short, I have to say restructuring is the one way to move forward. But based on the information, all the data we have seen over the past few weeks, there are two main reasons that cause such a negative headline, weaker growth in the China residential market. The first is a weaker than expected sales volume, which generate quite a lot of cash flow crunches. The second one, which nobody has addressed that, is some of the developers seem to accumulate quite substantial amount of land bank in the lower tier cities. When it comes to lower tier cities, you and I know they have a problems of headwinds because of imbalance of demand and supply. Therefore, we are expecting to see, I think for developers with a higher exposures in the commercials and the tier 1 cities, they will outperform. For some developers and the lower tier cities exposures, unfortunately, they were facing some more default risk, and consolidation MMAs is likely to happen going forward.
And Henry, remind us again, Country Garden's exposure is mainly geographically where? It's in their upper tier cities, exposure has been pretty decent. However, over the last few years, they bought quite a lot of land bank in the lower tier cities. I have to say that's a wrong strategy.
And Henry, what are your expectations, or at least what's your research telling you about potential government bailouts? It looks like the state-backed companies might benefit from this more. The private companies, there's been some suggestion that they may actually have to just sell assets. But in Country Garden's case, it might actually get lucky. I saw a video posted by a commentator on Bilibili suggesting that it's been, one, a good student of the 3 red lines policy, and 2, given what you're saying, it has a large exposure in the lower tier cities. That could be a big problem from a social stability standpoint. So the government can't exactly leave this company alone.
Yes, and I agree with you. I think that while we are looking at government policies, we are expecting to see more policies to support residential market is coming online in the coming weeks. But one thing I really want to highlight, the policy is going to support the end user demand. The end user demand support is going to solve the problem if you had the exposure for tier 1 cities. However, those end user demands stimulus support is not going to solve the problem for lower tier cities, because lower tier cities, they really have structural issues, imbalance of demand and supply, and population continue to outflow. But in our house view, we are expecting to see China residential market so-called facing some systematic risk. But we are seeing more default will to come, and some SOE backgrounds developers is going to play the white knight to rescue some of the underperforming developers. And for the Country Garden related issues, I think we are going to continue to see they are going to do restructuring. We have already seen they are moving the upper tier cities exposures and commercial real estate market in the one bucket, and lower tier cities, I think those exposure, I have to say, we're having some tough challenge.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.